Hello, everyone, and welcome to the HUBB U.S. market update on the 21st of April. It's been a pretty volatile week for some names, but the overall market was pretty well a push. We welcome to the show Rob Roy, Chief Market Strategist at Elliott Wave Options. Welcome back, Rob.
Hey, Doug, how are you?
I'm fantastic, mate. Great to see you.
Good to see you.
As always, Rob is using HUBB's charting software that you'll see during his analysis, and you can check that out at hubb.com, which is linked below. Okay, Rob, you're going to give us the US market summary today. What are you looking at on that side?
Welcome, everyone, to this week's U.S. market update. And as you can tell by the background, different background than normal. Everyone's used to the cabin in the mountains or the dragon capsules, I call it, when I'm home at the office. But I'm actually at some family's cabin in the Smoky Mountains. And if you can hear a little bit of congestion, it's because there is an amazing amount of pollen up here. They are looking for some rain and have massive signs about fire advisories everywhere. So I apologize if I sound a little bit nasally. So anyway, that's the idea of the difference of the background. But taking a look at the market, looking at this move back to the downside, I think the keys here, there's not really a whole lot different to talk about than when we've talked about the past couple of weeks. As long as we stay above 410, I think we're okay. The fact that we've gone through a little bit of consolidation as we near those highs that occurred back in the beginning of February. We put the moving averages on, and when you see from the 10, 30, and 50-day moving averages, now we closed right on the 10-day moving average yesterday, dropped a little bit below it today. So from that standpoint, I think you never want to see the market close below the 10-day moving average, but as long as we stay above 410, I think everything that we've been talking about the last several weeks stays intact. You still stay with that cautiously optimistic bias. And if you want to see that zigzag pattern one more time, I'm not going to go through and show all the complex C waves, etc. This is the big one. It's still in place. So we're right here at the 61.8% level. So we hit it in February. We're hitting it again now. We still have that extended target up there at 436. And I just don't see anything from these charts that looks anything different from where we could go from here. If we take a look at the interest rates, I think we're right in the sweet spot. We do have a 5-wave to the downside qualified pattern on rates. I'll be a little bit nervous, as I was back here in the beginning of April, if we were to break below that 34 level on kind of this vertical nature that we did back in the beginning of April. But other than that, I really like where we are as far as sitting in this range between 34 and 40. Again, if you've been watching us through these broadcasts, you know this. I've been talking about it for a while. So I feel like it's good to repeat the things that we've been talking about numerous times and to see that the market is acting exactly as we had hoped. The dollar is holding at this area, and I would like to see the dollar actually move on down to that wave 5 low, because we do have trade on SLV for our alert subscribers at ewotrader.com, and the dollar is correlated pretty much with the metals right now. So if we could get the dollar to break below that level, we could get a big spurt higher. We've had a little bit of a gain in the SLV, but certainly a drop below there would give it a big juice in the calls on the SLV. But for now, it's kind of holding in that area. We have labeled the wave 5. We'll see if we can break below this level near 101 and move from there. Taking a look at the rest of the markets on the Dow, the DIA, again, not a whole lot of change. As you said, Dux, we're just kind of just status quo for the week. Looking at 340 as that high. No wave 5 designation on the DIA either. So no designation on the SPY, none on the DIA. And we're right here at that major point of resistance at 340. How 340 goes will tell us how things are going to play out on the DIA. We did manage to close above the 10-day moving average on the DIA. Is there any sort of hint that perhaps the Dow is starting to take over and become the leader once again? I don't know if we can go quite that far. So let's look at the Qs, which has been the leader here, and they're looking pretty constructive as well. As long as we stay above this wave 3 high right through here, although we did close below the 10-day moving average 2 consecutive days. You can see we were up today, though, on the Qs, hit the 10-day moving average on the high, but this is just normal consolidation following this big run up that we had from the wave 4 low. So we had this big move and we've gone sideways here. If we break above this and hit this wave 5 target, which I think is a distinct possibility, then the Qs look pretty good. So maybe the Dow just slightly outperformed the rest of the markets today, but not by much. We look like and we've had this kind of scenario throughout the week where it looked like the market might just be ready to throw in the towel and sell off and have a big down day. And every time it looks like that, we get some buying to come in and recover. So every sell-off attempt seems to be met with buying, and you can't look at that as anything but a bullish scenario. Now on the IWM, if you really want an indication of risk on the small caps, we have made that move off of the lows there that we've been talking about at 170. And here we are moving up towards 180. We hit the 50-day moving average, backed off a little bit, but as you can see from that trend line, we're maintaining that higher low scenario through there. So nothing to be concerned about along these lines. But as far as where we go from here, moving up towards that 190 level would be great. But as long as we stay above 170 and around these moving averages, I think we're constructive here. I don't think there's anyone that thinks we're in a, let's go hard long, no worries about risk type of a market, which is what we like to see when we have the IWM performing well. I just don't think we're in that kind of arena. So with that, I think that the IWM is performing pretty well also. So kind of a status quo week. Let's take a look at a few of the international markets. We'll look real quick at the EWA for Australia. We talked about this last night in our insiders meeting. For our alert subscribers, we have a lot of subscribers from Australia. Thing to notice today is that we did break back below that 10-day moving average. We had held it for a while, but even though that's not a positive, as long as we hold above 23, we're okay. We break 23, then we're very likely coming down to 22 and perhaps in a short period of time. So not great that we broke the 10-day moving average. The positives are we held the 50-day and we held 23. So I think if you're long the Aussie, you want to stay long as we stay above 23 on the EWA. If that changes, then once again, perhaps you change your tune at that point in time. Looking at the Canadian market, up near that resistance area at 36, staying through here. That's just, you can't really look at another long leg until we get above 36. Traded below the 10-day moving, he tried to say, below the 10-day moving average on the low, but closed above the 10-day moving average. So that was a good close. So just consolidation here under 36. That 36 holds and we break back to the downside, you can clearly see where we're likely to go, probably down to 32. But if we can break above 36, then we might have something really significant moving to the upside there on the EWC. On the INDA, for our friends in India, if I can type the symbol in correctly, be quite helpful. But on the INDA, the whole level of 40 remains the same, as you'll see, and I've been using that song Remains the Same from Led Zeppelin line for quite a while now. But notice that we broke below it today and traded and closed back up to it. So a little bit nerve-wracking that we traded below the level of 40 for quite some time. But I think you have to just give it a couple more days. Can we get back above 40, or have we broken it and testing that, and now 40 is resistance? That's not what you want if you're long the INDA. And I know based on the comments from last week's YouTube video that there's a lot of you that are paying attention to the Indian market and the INDA. So I can tell you that you want to see that back above 40 quickly. The longer we kind of hang here, the greater chance there is that we break down and move lower. All the major moving averages converging in this area. So just a tiny bit of concern maybe there on the INDA, not enough to get too worried yet, but the most positive would be to break above that level there at 40. And Germany, look at that. Look at that move in the German market there, Dux. Just bam, right off the 10-day moving average. So, the market that was performing the worst over the last few years has been performing the best since October, those October lows, and it continues to do so, consolidating this last move above the 29 level, extending that wave 5. Nice move today to the upside. And look at that volume spike there on the EWG. So we're not the only ones, Ducks, that are looking at the German market. There's some interest there. Pretty impressive bounce off of the 10-day moving average. And you could do a lot worse, I think, than going along the EWG. But that pretty much sums up the markets and the big international ones that we look at.
Well, Rob, you must have been super keen because I didn't even get a chance to tell the viewers, get your questions in for Q&A at the end. I didn't get a chance to tell the viewers, like, make sure to click on the subscribe button below and the like buttons. But I love it. I love it how you're super keen for this other side of it. All right,
yeah,
Rob.
I think I perhaps got a little bit long-winded last week, so I thought maybe I'd give everybody a break. So on their Fridays, moving into the weekend this week.
All right, so let's move on then to your stocks of interest that you've got to choose. What are you starting off with us for? With
I want to get to JP Morgan, but guys, if you'd bring up the link about there's a recession coming from that investment manager. I just thought I would talk about that real quickly with the yield curve. We've been talking about this, Ducks, with the yield curve being inverted, and it's almost like, what have you been watching at this point? Now you're going to come out and say, oh yeah, there's likely a recession coming. You think with the inversion that we've had with the yield curve. And the reason I bring this up is sometimes you just shake your head at some of the stuff that comes out on the financial networks. And that's why I think you need to be looking at software programs, something like this, and learning to trade yourself, because you just shake your head. There's a famous story that I had of when something was said on the financial networks that I thought was so ridiculous, I actually threw something on my TV and broke the screen. And so now I tend to keep the financial networks on mute. Unless there's somebody that I really want to listen to or something that I think is important. But for somebody to come out and say, hey, yeah, I think that there's a recession coming with the fact that we've had such an inverted yield curve for so long, I thought that was comical. So that was kind of, a little comic relief there. But as far as getting to talking about the markets, we also let me show the VIX real quick, Dux, if you don't mind. I'll show the VIX because this kind of coincides with a comment or a survey that came out from JP Morgan. So when we look at the VIX, and we've had this break below, and we're talking about sentiment here and investor sentiment, right, with the VIX. So we broke below 18. We're trading down below here. That's a concern if you're long the market. We know that 18 area has been support for quite some time, but it's not the all-time low. So we can go down to 16. We've been down to 12. We've actually broken below 10. But if you are short, and gosh, from the comments that we got from our last couple of weeks videos, Dux, we know that there's a lot of people that are angry that we even hint that we could go long from here. But there is something for you to hang your hat on here on the volatility. I would note the intraday volatility on the VIX, but JP Morgan released a survey. And if you have that link, guys, put it up on the investor comments. It's just simply that 93, 94% of JP Morgan's investors feel the market is going to go lower in 2023. So from a contrarian standpoint, where do you go? This is a dichotomy, isn't it? You've got the VIX that's down at the lower end of the range. So that would say, okay, sentiment is, pretty bullish. We're quiet. It doesn't necessarily mean bullish, but it means we're quiet. And we know when volatility springs back in, the market usually moves back to the upside. But when you have a bank the size of JP Morgan releasing that their investors almost to a person feel that the market's going to go lower, that's awfully heavy sentiment to the downside. So you tell me, Dux, where are we going?
I don't know.
Yeah, get your crystal ball out and tell me where we're going, because I have no idea. Just looking at the charts and reporting what we have, I still say until we lose that 410 level, cautious optimism remains the same. But anyway, you asked me about stocks of interest. So let's take a look at Bitcoin. And there was a comment while I'm bringing up this chart, guys, if you could bring up that comment from Fed Chairman Bauman. I just thought this was uh, what's going on? We've got Bitcoin. The Federal Reserve has been saying for quite some time that they're going to create their own digital currency. Now, what do you think the Federal Reserve is going to do to Bitcoin or some of the other digital currencies if the Federal Reserve creates a digital currency? Now, at least from what Fed Governor Bowman is saying, they don't see the need for a U.S. digital currency, as if the Federal Reserve is the U.S. And we could get into a whole conspiracy theory, and maybe we'll do an event on that sometime, Dux. But you know, the money that we have in our wallets says Federal Reserve note, does not say U.S. government, which it used to before the Federal Reserve took control of the money. Used to say United States of America on our money, not Federal Reserve note at the top. So where is that comment coming from? Even Chairman Powell's been saying that the Fed's been working on their own digital currency. Are they changing their mind? Wouldn't you have thought with that kind of a comment that this would have been a big update on Bitcoin? Hadn't played out that way. We've talked about this. I was concerned about this vertical move to the upside, but then also said that if you're going to consolidate a vertical move, that's about as good as you can do, where we consolidated for a couple of weeks into a triangle, and then we made another vertical breakout. Well, that one's been retraced. Well, last week when we were talking, Dux, we said that, okay, well, if it retraces back to the midpoint of that triangle, that's normal. There's different types of breakouts of triangles. And when you get a vertical breakout like this, so we had two vertical breakouts in a row, coming back and testing the point of the breakout, that's normal. If we start to break lower, and we're kind of breaking below 28,000 on Bitcoin now, if that gets any sort of follow through, then that brings in the concern that I've had here of, could we give back some of this vertical move to the upside? So Dux, I think we're at a very crucial level. If you're long Bitcoin, you know, been discussing the fact that the halving, you know, everybody makes fun of the way I pronounce that. That's supposed to occur in the first quarter of next year. And typically in the year before that is when Bitcoin has one of its rallies. We need to hold this level, I think. So perhaps a little more caution than we've had in several weeks here on Bitcoin. We need to see it hold in this level. If it doesn't, if it breaks below this point of the triangle and starts to head lower, we're in danger of this entire vertical move being retraced. So I think we're at a very key time here in Bitcoin.
I know you're talking about your stocks of interest, but one to really look at, and we've discussed a lot, and there's a lot of questions about, was Tesla.
Tesla. Thanks for bringing that up. And, you know, it's been one of our main points. And this is actually what we talked about Tuesday night in TradeFinder before this breakout. So when we're taking a look at this triangle pattern, and by the way, if you haven't joined us for a TradeFinder, you can sign up. There's a link there. You can go to our website, ewotrader.com. We do TradeFinder every Tuesday night at 9 p.m. Eastern time. We talk the markets, we look for trade ideas, and we have a live Q&A. And of course, anytime you're doing anything live, as you know, Dux, right now, people want to know about Tesla. So what we talked about then, I'm going to take the Elliott wave pattern off, and I'm going to walk us back. And we're back here looking at this triangle pattern. And Elliott himself, the reason I turned the Elliott wave pattern off, which is a great part of this software, is, if you've pointed out so eloquently, is triangles trump everything. And with this triangle, we could break either direction. I think we even asked a question on where do you think this is going to go from here, or Tesla's going to go from here? Because when you have a triangle that's this well constructed, it can break either direction, regardless of where the Elliott wave pattern is. And the breakout was to the downside. Why? Because Elon Musk announced price cuts. They're cutting the cost of the cars again, and that has to do with competition. And that's always the way it works, isn't it? That when more competition comes in, prices go down. It's good for the consumer, not necessarily good for profit margins of the company. And that's what created this breakout to the downside, significant breakout. So we snuck to the downside here, big follow through. Now we're down at 160. And You know, there's not a whole lot of support here, but it's the last bastion of support, because when you look at this chart coming off those lows from January, below 100, you can see, or right around 100, I should say, that was a pretty vertical move to the upside. If we can't hold 160, then that whole entire move is in danger of being lost. And when you're starting to talk about price cuts and margins and profits, the danger, Will Robinson here for Tesla. And I know, again, people aren't going to want to hear that, but that's the truth. And we showed it. We showed it here on these recordings. We showed it Tuesday night in TradeFinder that something was getting ready to happen. And that's what happened. And so a strangle on Tesla would have enjoyed a pretty nice gain this week. But for all the big Tesla bulls out there, don't get mad at me. I'm not the one that came out and cut the prices. That's what happened. That's what caused the stock to move to the downside. So can it hold 160 or not? We'll wait and see.
Rob, just I think on that gap down on Thursday, it was the biggest amount of volume in the last couple of months, I think.
Yeah, let's bring the volume chart up. That's a good point. Yeah, look at that. Look at that big volume spike. So, yeah, people weren't too happy with that. You start cutting prices and you cut profit margins, and that's not good, especially when you're dealing with a stock that's priced for perfection, as Tesla is. I mean, a lot of pricing power on Elon Musk, I think, as much as there is on the Tesla product. But yeah, you're right. That was a big volume down day, quiet day today, which that part's good, but it was a bit oversold from yesterday's move. Can it hold 160? That's going to be the key. What do y'all think? You know, you guys make a comment. Can it hold 160 here? How are your viewpoint? All you Tesla bulls out there, is it concerning to you that Elon's cutting prices and that the competition is forcing price cuts in the vehicles? Can the stock maintain its king status here? I'm anxious to hear what everybody else has to say.
Let's go from some of them like rough earnings to good earnings. CSX, Mr. Buffett loves
Good
CSX.
Call. Yeah, good call there. And good old Warren Buffett loves the railroads, as people know. And there you go. Yeah, CSX came up and they were an earnings surprise. There was actually some commentary today on, you know, this goes back to the comment that I was making about the recession coming. When just the things you see that come out, it's almost like people are trying to find talking points. And there was a comment that, oh, the earnings have been so bad. Yeah, well, go tell CSX that. You know, the good earnings day, a little bit of a doji here, but big move to the upside. And we do want to check the volume here. And this is what you want to see, this kind of volume, when you're looking for a good earnings report. Good, solid, above average volume, not a massive spike, which tells you that everybody wanted to buy, or everyone that had wanted to buy has already bought and are where the new buyer is going to come from. You want to see good, solid, above average volume to support a move like this. Now, I don't like the gap. A little concerned about the fact that it gapped up for the near term, and then a little bit of separation from the 10-day moving average, but a great earnings report. And, you know, the earnings have not been that bad, regardless of what people are saying and what some of the talking heads are saying on the networks. And that's a perfect example. That was a good one to bring up there, Dux.
All right. And then talking about freight trains, NVIDIA continues to move like one. Let's have a look at NVIDIA.
Yeah, we really can. This is on the most talked about stocks on Twitter almost every single day. It is unreal the amount of interest that goes into NVIDIA. And the fact that we're in this consolidation range here, but look at this volume. See, the volume is dried up. That's what you want when you're in a trading range. So I think with where we are with NVIDIA right now, we have support at 260. You break that, we're most certainly going down to 240. I'll just draw a little small line there. That's the next level of support there. Resistance is up here at 280. If we can break above 280, then NVIDIA is off and running again. Dux, as hard as it might be to believe, but there's that wave 5 target sitting up there around 330. If we can break above 280, I think that's where we're heading. If we break below 260, then we have to start thinking about this potential wave 4 projection down there. But it would have some support there at 240 to start with. But this consolidation in this trading range between 260 and 280 on declining volume, If you're bullish, that's what you want to see. Does that guarantee it's going to break to the upside? No, of course not. But that's the kind of scenario that if you're dealing with a stock, which we know so many people are with NVIDIA, that's the price action you want to see.
Okay, Apple continuing to be friendly with Goldman this week. What does it look like for Apple?
Yeah, and it's interesting. That's also on Twitter's list today. It's kind of, when you look at Twitter's list, it's kind of going back to there wasn't too many weird things. There was Bed Bath and Beyond, but that's ridiculous. So I didn't even want to mention that one. But again, look at this low volume here on the consolidation. But the key here is the low volume is going through the consolidation part of it, not the upward move. So if we had seen low volume on this kind of stuff, that's not what you want. But down here, we had good solid volume when Apple was moving up. But now that it's consolidated, during the consolidation, low volume. So very similar to what we just talked about on NVIDIA here with Apple. And can it break above 170? If it can, then I think Apple's off to the races. Again, slight increase in volume as we tick down a bit, but I don't think that matters. We're in the trading range. So just like we talked about, 260 to 280 on NVIDIA, it's 160 to 170 is the range you want to watch on Apple. So I know people don't like it when we're talking about trading ranges and you sit on your hands now. They want directional biases, but sometimes the best trade is no trade. And so far on the ones we've been looking at, other than maybe CSX, that's probably the best thing to do.
Okay, and the last one to look at is another one that had earnings this week is Netflix.
Yeah, and I don't know if you saw the news, Ducks, on Netflix, but they talked about how they're putting off until the end of the year. Remember, they've been saying they're going to go attack all the shared logins, and we know how many of your friends are using either your login or you're using one of theirs. I've got several, so I know that this is a problem. I'm one of the guilty parties, if you will. But
I'm innocent.
yeah, so they're putting it off. They're going to wait. So I would have thought when that news came out that was going to be a massive negative to the downside, because you feel that's got to generate a tremendous amount of revenue for them when they go and get all the people that are sharing logins to start paying. Seems like that would be a boost. So the fact that they're putting it off, I thought would have been more negative. I was really surprised to see Netflix hang in there the way it has so far. So as long as you stay above 320 there on Netflix, I think you need to maintain your long bias. We are forming just a little bit of a triangle there, and earnings, just, we'll see how all that plays out. But maybe we break out from the triangle. But I just was shocked to hear that kind of news out of Netflix.
All right, now we jump into Q&A. I love the Q&A. You guys have some fantastic questions, and there's some great names. I've got a screen over here now, so if you see me looking over there, I'm looking at the screen, all these different questions coming in. So we do this 5 o'clock every Friday, so get your questions during the week. We'll be ready to go each week. So the first name we want to look at is Moderna, mRNA.
Okay, and one that, as you can imagine, used to get asked about all the time, and then as COVID seems to be waning a bit, then obviously not so much in the news. It isn't a qualified 5-wave to the downside pattern. Look where that wave 4 is, exactly at the 38.2% fib level. And so people that aren't maybe as familiar or using Elliott wave and Fibonacci levels, I would encourage everybody to consider adding that as a tool in your trading toolbox. I think if you spend enough time to learn about it, it's not an easy system to learn, but the software really helps you a lot in order to become better at Elliott wave and Fibonacci levels. But it isn't a 5-wave to the downside pattern. The bottom line here is on Moderna. I mean, you're at 140. Now the 5-wave pattern would suggest that we're going to break that level. Can it hold it? Can it move back to the upside? Because that wave 4 could go to 50 or 61.8%, but it bounced down off the 38.2% fib level. So 140 is your key. If it can hold 140, then perhaps you're starting to look at a test back to 160. But if it breaks 140, then I think that wave 5 target down there around 110 is probably where we're headed. So yeah, good one, good question there, and dealing at an extremely important level at the moment.
All right. Well, here's one for you, which you might have ever looked at before. It's Pool Corporation, POOL.
POOL. All right, so we'll take a look and
No prizes for guessing what they do.
it couldn't have anything to do with pools, could it? So when we go through and look through the chart here, barely look at that wave four, 78%. So the last bastion of fib support is 78.6. It held. I kind of use the analogy of fingernails hanging on a cliff here, but it held, and it's tested it twice since then. So you have to feel pretty good about that. Now we are at resistance, and if we can get above 340, and it's a qualified 5-wave to the upside pattern, then we're off to the races here. It has to do it. It has to break above 340, and a break is just not good enough for me. I need a break with follow through for me personally. But when you see that, if it could do that, then I think you've got a great trade. So the person asking the question here, if you can get this to break above 340 with follow through, I think you've got yourself on a good one. Notice the 10, 30, and 50-day moving averages all converging at the exact same point where we're trading here at 340. So break above 340, and there you go. Break below 320 though changes everything. Anywhere between 320, yeah, we got a lot of trading range stocks today, don't we? But as long as we can hold above that 320 level, and then you stay long.
What about DraftKings?
Let's take a look. Yeah, I haven't heard this one for a while. We talked about this back with the Super Bowl, and then I think you were talking about March Madness. And how about that? So we thought that, they got two massive sporting events likely reported in the same quarter for them, with the Super Bowl and March Madness. And that's pretty darn impressive on the move to the upside there. It is breaking above the wave 3. And the only negative here that I see is that there's a little separation of the 10-day moving average. So we're a tiny bit overbought at this moment. However, I do think that it looks like we want to get, when I see something like that, I want to see the DMI, and that's as good as a DMI gets. So you have good separation between the two directional indicators, a positive directional indicator up here telling you the bulls are firmly in control, the ADX moving to the upside. So we have all those things working in DraftKings' favor, in addition to the fact that it's in the sin stocks category, tobacco, alcohol, and gambling, which tend to do well when the economy weakens. So that's, the viewpoint is that no matter how weak the economy gets, people aren't going to give up their vices, drinking, gambling, and smoking. So you take a look at this chart, breaking above that previous wave 3 high. Maybe you wait a day or two and see if you pull back or let the 10-day moving average catch up. I like this chart. I think this goes higher. Really good call there.
Listen, there is so many questions coming in here. We're going to have one more, but if you do want to get your questions in, don't forget you can go to TradeFinder on Tuesday nights, 9 p.m. Eastern Standard Time. You go put some more questions into Rob and see if you can test him out a little bit harder. The last question I'm going to have, and it's me being selfish coming from me, but I think it's quite relevant because still a lot of big companies reporting next week, like Amazon, Microsoft, just to name a couple, Meta. But I think we should be asking about Google on Tuesday after the close.
Yeah, that's a good call, Dux. I totally agree with you. And so hope everybody tunes in Tuesday night as well as next week for next week's live market update, because as you mentioned, all those big earnings, certainly we're going to see some market movement next week. Google right now is hanging in there right at this level of 105. I think it's consolidating extremely well. When you look at the DMI down here, there's a little bit of a tick down in the ADX, but that's okay because it's been consolidating in this move. We have a little bit of a triangle working here. We did close on top of the 10-day moving average. I don't see anything that's is really concerning at this point. Let me get the moving averages off, and then we'll just go ahead and finish this triangle pattern. So that with where we are at 105, if we can break to the upside from here, then I think it's a pretty quick run, because look, there's nothing in the way there until those highs from back in August, which put us right in the middle of this tap box. So we break out of this triangle. I think we're running to 115. If we do break 105, that's not that big of a concern either, because there's good support at 100. So, do you want to get in front of an earnings report on Tuesday? Perhaps, maybe not, but wait and see what happens. And if we can break to the upside following that earnings report, I think there's follow through. So yeah, that one's going to be really interesting Tuesday night. Tune into TradeFinder as you've been discussing, Ducks, and we'll be able to go through and let everybody know how Google did on earnings. That's a perfect call for moving into TradeFinder.
All right, now listen, everyone, don't forget we're back each and every Friday, 5 p.m. Eastern Standard Time. So once again, get those questions together. Click on the like and subscribe buttons below. Rob, have a great weekend.
Thanks. You too, Ducks. Appreciate it. This was a fun show. Take care, everybody.
Everyone else out there, enjoy your weekend as well. We'll see you next week.